Hi, my dear students. Welcome you all for the first session on income from house property. In this session, we are going to discuss some concepts related to house property and also gross annual value and annual value. So let me begin with what is taxed under this head. So definitely you may ask question, income from house property means what? It is nothing but it is a rent that you receive from letting the house property. So if any house property, maybe it may be a building, it may be a farmhouse, it may be a godown, it may be a commercial complex, anything. If you let it to somebody else and if you receive rent, and that is called as income from house property, and that is taxed under this head. So any rent received by letting the house property is taxed under this head. Conditions to tax income. So what are the conditions to tax any income that comes under income from house property? So in order to tax under this head, there are three conditions which must be fulfilled. So what are these three conditions? If these three conditions fulfilled, then only we can calculate tax under this income from house property. Otherwise it will not come under income from house property. It may be some other head. So what are the three conditions that need to be fulfilled in order to tax income under this head? The first condition is there should be a building and land attached to it. So first of all, there should be a building. Without building or without any structure, we cannot let it out. So there should be a building and there should be land attached to it, because without land you cannot construct a building. So it becomes a bogus building. So you cannot construct a building in the air, or you cannot construct a building under the deep sea. Okay, though it is possible, but normally it is impossible. So there should be a building and there should be land attached to it. Second condition is assessee must be the owner of the house. You cannot claim somebody's house as yours house and give it for rent or receive the rent and say that this is income from house property from my house. No, you should, assessee should be the owner of the house. Then the property must not be used by the assessee for own business and profession. So assessee should not use the business or use the building for his own business or profession. Okay, then it becomes something else. It will come under income from business and profession. Then let us see what is the meaning of building. So meaning of building means building includes residential houses, warehouses, any block of assets or stonework covered by a roof. So this is what income tax defines a building. It can be a residential house. Residential house means the people where they live. Warehouses means it can be a godown where the goods are stocked, or any block of assets or any stonework covered by a roof. Then following cases are not included or not treated as income from house property. So what are the cases? Let's see. First one, building or staff quarters let out to employees. If any building or staff quarters let out to employees, then it will not be considered as a house property. It cannot be considered as a building for house property. It will be considered as something else. Then building let out for post office, police station, authority to locate a bank, etc., will not be considered as income from house property. Even though it is let out, even though if you receive the income also, it will not be considered as income from house property as per the Income Tax Act. Then building let out in composition with other assets such as machinery. If you are letting the house or letting the building along with other components, okay, along with other components such as machineries or equipments or anything else, okay, then definitely that will not be considered as income from house property. Then paying guest accommodation, you might have come across this word many times, PG, or whatever the income that you get from PG accommodation, whether it is coming under income from house property. No, income tax says that paying guest accommodation is not income from house property. So these are the things. Then some important points to remember. First one, assessee can be the owner or deemed to be owner of the property. Assessor need not be always owner. He can be deemed to be owner of the property. What do you mean by deemed to be owner of the property? So deemed to be owner of the property here means, okay, you are actually not the owner of the house, but you receive the income from that house. Then you become the deemed owner of the house. Why you receive the income from that house? Maybe your friend might have asked you to look after the house, or maybe some different cases. You become the deemed owner. Then, in case of disputes of the property, the person who receives the rent have to pay tax. So, for example, there is a dispute between the brothers for one house, and one brother receives the income from that house. Maybe that house might have been rented to somebody, and one brother receives the income. So, person who receives the income will be the owner of the property. He has to pay the tax. Then, if the actual tenant further lets out to some other person, then it is called as subletting. Subletting means you take the house from somebody else for rent and you will not stay in that house, you will let out to somebody else. Then it becomes subletting. It will be taxable under the head income from other sources. Then we'll continue with the discussion on gross annual value and annual value. So first of all, annual value, very important in income from house property to determine the annual value. So once the annual value is determined, then we will give the deductions, then we will get the income from house property. So what is this annual value? So meaning is there in the word itself. Annual means it is for entire year. What is the value means what is the worth of that house. So what is the worth of the house for entire year? So what income tax says regarding annual value? So under section 23 subsection 1, annual value of any property shall be deemed to be the amount for which the property might reasonably be expected to let out from year after year, subject to deduction of municipal taxes. So this is what the definition given by the income tax rule or law regarding the annual value. Very clearly they say that any property shall be deemed to be the amount for which property might reasonably be expected to let out from year after year. Okay, if you have any property, house property, okay, if you let out that property to somebody else, what is the rent you will receive? That shall be the value of that house, or that shall be the annual value of that house. Very simple, after deducting the municipal taxes. Okay, once again I'll tell you. So if you have any house and if that house can be let out to somebody else, okay, somebody else, and whatever the amount that you receive from that person or going to receive or reasonably expected to receive, whatever you may not receive or may receive, but this is the reasonable rent for that house if you fix it, and that shall be the annual value of that house after deducting the municipal taxes. Then steps to calculate the annual value. So very simple, two steps are there to calculate annual value. First one is to calculate the gross annual value, and second one is to calculate the annual value by deducting the municipal taxes. So let's calculate the gross annual value. So to calculate the gross annual value, we should have four values here: municipal rental value, fair rental value, standard rent, and expected rental value, then actual rent. So these five values may be there or may not be there. If one value also is there, we can definitely arrive at annual value, or if you have only actual rent, you can arrive at annual value. There is no compulsion that all these five values should be there, but if it is there, then we have to compare with certain values. So first of all, here municipal rental value. So municipal rental value is the value determined by municipal corporation to pay the municipal taxes. Okay, this will be there for all the houses, I suppose. For all the houses it will be there. Then the fair rental value. Fair rent in the sense it is a reasonable rent. How will you find out reasonable rent? Very simple. You just go to your neighbor's house or some other houses in your locality. Find out whether it is rented or self-occupied. If it is rented, what is the value of the rent received by that house? Shall be the value of the rent of your house also. So that is fair rental value. So value of the house property which is given for rent shall be the fair rental value of your house. So both values should be compared, and in this whichever is higher should be taken. So in this, whichever is higher should be taken as the notional rent. From that notional rent, we have to compare the standard rent. So standard rent, in the sense, it is fixed by the government standard. So this is the rent for this house. So you have to take that rent and you have to compare the notional rent of this and compare it. So in this, whichever is less is your expected rental value. So this is the rent that you expect from that house, the expected rental value. So once you arrive at expected rental value by comparing all these things, then you have to compare with the actual rent. So how will you get it? Actual rent. How will you get? So very simple. So actual rent is equal to annual rent. Okay, annual rent in the sense rent that you receive for entire year, 12 months. Okay, take that rent and deduct if there is any unrealized rent. Unrealized in the sense rent that is not realized or rent that is not paid to you, minus cost of common facilities. If there is any cost of common facilities, that has to be deducted. Then it should be compared with the expected value, and in this, whichever is higher shall be the gross annual value before vacancy period. Okay, then as it is said here, vacancy period, you minus the vacancy period, then you will get the gross annual value. So this is what from this session. So thank you for watching this video. So we have discussed some basic concepts related to house property, then we have discussed gross annual value and annual value. Thank you for watching this video.